A big part of the discussion when it comes to the health of our markets is the economy, as discussed both here in the U.S. and around the globe. Earlier today, we sat down with Steven van Rijswijk. He is the CEO and chairman over at ING Bank to get his perspective on the European economy and which countries are showing signs of strength.
The first point I want to make on our quarterly three figures was the growth. We grew our primary mobile customers with about 200,000. We tried to grow our customers on an annual basis with about 1 million. Now, if you look now back Q3 on Q3, we came up with about 1.1 million, so that's good. The second lever we pulled to grow is fees, so less dependency on interest income. There you saw that our fees grew in the third quarter compared to the same quarter last year with 15%. So that's really good, more diversification. And last but not least, also lending growth was good with 14 billion. On average, we grow our lending with about 3 to 4% per annum. This time around, if you look, it is about 7% compared to the same quarter last year. So we grow really well. And diversification is the key word, because we have a bank that is 80% dependent on interest income, 20% fees, and we want to grow that fee part.
And we're sitting here in New York City, of course, and we spent a lot of time talking about the American economy. I would love to get your perspective on what is happening in Europe right now, because you talked a little bit about, of course, the payouts that you plan to make, and there's this idea that, you know, choosing to be a little bit more cautious on drawing down your reserves has been taken as maybe a signal that there's some caution about the economy ahead. And I would love to hear your thoughts on which direction you think things are going.
Yeah, we increased our capital reserves a little bit because there has been a bit of creep in our capital requirements in Europe, especially counter-cyclical buffers have been going up over the past 5 years. And that's why we want to have a good cushion between our actual requirements and, let's say, the buffer that we have. And that's why we moved our capital level up to around 13% CET1. But in general, I think, despite the fact that we thought in the past 6 to 9 months there would be a recession in Europe, that risk has come down a little bit. We see Europe grow close to 2%, a little bit lower than the US, but still positive. There is a bit more discussion about making more investments in Europe. For example, you see in Germany a 500 billion infrastructure fund. You see talk about defense investments. You see talk about digital investments. So there is more a business acumen in Europe than there was, let's say, a year ago, maybe also on the back of the Draghi report. So there was also a bit of a wake-up call. So the talk is good, but we still need to do more in action to invest more in Europe.
Absolutely. I mean, just taking a look at the performance of the European stock market this year, I think that has surprised many people. It seems like European defense is one of the talking points of the moment. But talk to us about how that economic activity, that it seems that recession risk is a little bit lower than maybe it has been in previous months. How is that translated into deal making from where you're sitting? We've seen a little bit of a resurgence when it comes to the American side of things. Have we seen a similar pickup when it comes to Europe?
It's starting. And we saw it in the third quarter because we had a lot of deal activity, or at least deal pipeline, in the first and second quarter, especially in our wholesale bank. That did not convert into real transactions, but in the third quarter you saw it coming through. Big lending volume in wholesale banking that grew with about 7 billion, and a very large portion that also translated in lending fees and financial markets fees that we did not see in the first 2 quarters. So we had a stellar quarter for the wholesale bank. So it's a bit early to call whether that will be consistent or not, but these are positive signs.
Is this something that I think is, I guess, specific to Europe? Are we going to see, I guess, an opening of this market in terms of capital markets over in Europe in a way that I think has been lacking, at least relative to what we've seen in the US over the past couple of decades?
One thing that could help Europe is if we have a savings and investment union. If we currently look at Europe, we have a 16, 17 trillion GDP. We have a 12 trillion amount of savings sitting in the banks. But if we could invest that more into European companies, European stocks, that would help as well. That has now been an ongoing conversation in the European Union and the European Committee. If we could do that, that would really help furthering and boosting investment into Europe.
What's the fear amongst regulators in actually approving that?
I think that the difficulty is not so much that there is fear, but there's different fiscal regimes. How to really stimulate private investors to invest. It also means a different stance towards people investing rather than saving. So there's one discussion about how good is it for Europeans to invest versus to keep your money safely in the bank. And secondly, how do you fiscally stimulate that? Those are the two discussions on the table.
And I mean, speaking of that sort of question, investing versus saving, something that we've seen really in the last couple years is this big rush into money market funds when it comes to U.S. consumers. This idea that perhaps they're taking what would be sitting in deposits at a bank and putting them in cash and money market funds and getting that higher yield. Are you having similar discussions? Are you seeing similar trends, that sort of behavior happening in Europe?
A little bit, but that's more about private markets. So when we now look at, let's say, the type of investments that people do. So if you talk about personal banking, private banking, then you see more and more people being interested in private markets. That we haven't seen before. Investing in money markets, there are different regulatory regimes in Europe than in the US, so I don't see that coming very quickly.
And it's tempting to talk about Europe as this monolith, but let's get specific and talk about some of the different countries here, because you bring up retail banking, for example. I know that you had particular growth there. Where are you seeing the most strength coming from? What are some of the countries that are driving that growth?
Yeah. Well, for example, if you look at Germany, we have about 10 million customers in Germany. Both on the private side, like personal banking and wholesale banking. There we see a lot of growth. The market is recovering from where we saw a dip in the mortgage market in the past. That is now recovering. We see more people investing. We grow our investment accounts with about 100 to 200,000 customers per quarter. So we see a lot of growth coming from there, but that also has to do with our strength of our own franchise in the market. But we also are being helped now with a more positive business climate environment in Germany, where at least the companies and the government are willing to invest. But again, that is early days, but I'm hopeful.
Has there been any discussion about maybe having some sort of partnership with some of the private capital companies? Here in the U.S., obviously, we've seen a lot of direct lenders partner with the traditional banks. One of your management board members was asked about this a few weeks ago and seemed to suggest that that actually wasn't an option right now for ING.
No, what we see as ING, we want to really grow in the particular markets. Like you said, Europe is not a monolith. Different markets behave differently in terms of regulatory regime, capital, liquidity, products, product culture even, I would say. So what we need to do is to, first of all, grow in these markets and become more specific in the services that we offer to our customers. Mm-hmm. Secondly, fill in the blanks that we have in these markets. For example, we do have business banking in Romania, Poland, Belgium, and the Netherlands, but we don't have that in Germany, Spain, and Italy. So fill in those blanks so we can actually grow in width and breadth of our services. But of course, also, if we can see companies or banks that have good customer bases there, and we can take them onto our technology platform and thereby increase in scale, market by market, we will look at that as well. That is currently our priority.
Steven van Rijswijk, CEO and Chairman of the Executive Board over at Amsterdam-based ING.